Good afternoon, everyone. Futures Brizio here. It is about 2:15 on Thursday, February 26th. Hope everybody's doing well. And before we get started, as always, make sure you smash that like button, subscribe to the channel. Any questions or comments, please leave them down below. So, we're going to do something a little bit different here today. We'll kind of like indirectly look at where the markets are at today here in futures. But I wanted to talk about something else. Um, I had a question regarding use of volume, and whether I use volume or not. Now, I'll just say first of all, if you trade in the forex market, the spot forex market, I think volume is completely useless, and there's no reason to use it. Why? Because the forex market is not on a central exchange, right? So if you trade Forex and you bring up any volume indicator, you are only seeing the volume being traded on your broker, that from the liquidity feed from your broker. And if your broker is a market maker and you're on their B book, meaning you're basically essentially trading a simulated account, even if they say it's live because you have money in there, but it's a B book, meaning they're basically just taking the opposite side of your trade, assuming that most people lose. So, but even if you're an A book or you're on an ECN broker where they're supposedly pulling from the real market, you're only seeing the very limited volume of the entire Forex market. And again, if you're on a market maker and you're on their B book, which is where most traders are, you're only seeing the volume within that broker. Okay. So to me, volume has very, very little value of any type of volume in the forex market. But in futures, where everything is traded on central exchanges, it can have some value. Now, I don't use regular volume, kind of like traditional volume that people think about, which is like time based time based volume, which is like this, right? Old traditional volume like this, where it's time based. You have these vertical bars on the bottom of your chart. Okay, each bar just represents the volume for that particular time frame. This is a 4-hour chart. Just happened to bring up something. This is dollar yen, right? So this is traditional volume that people think about. I don't really find this to be very very valuable. Some people will use it to say, well, if there's not if the price is going up but the volume bar is very small, then that suggests that the volume is not that there's no real volume there, right? That it's kind of a false move to the upside. The problem with that is if the candle is still open and working, that volume bar is going to change significantly. And by the time that candle closes, if it's in an uptrend, that candle may close, that volume bar probably will close higher. So some people say they'll use it as divergence, like the price goes up, but the volume candle closes lower than the previous one. I mean, you can make an argument for all kinds of stuff. And if you use volume in that way, whether you use it to confirm the strength of a move or whether you use it for divergence, fine. I just don't find any value in it. So I don't use traditional volume whatsoever. But I think if you're trading things like, volume profiles, there can be some value. What you're seeing on the chart now, I'm in TradingView again. This is a footprint chart. I have it zoomed way in here. And a footprint chart is basically the way TradingView displays it. This is the current candle right here. And then it shows you what's going on inside of this candle, right? It's showing you that there are 89 contracts being traded, right? The volume is 89, right? Short buys or shorts. The delta is plus 47. So there's 47 more buys than there's sells, which is just the difference between the buy and the sell, 68 versus 21. So it's telling you what's happening inside of this candle. My whole argument to this is like, I don't necessarily need that. The candlestick is telling you what's going on here, right? Like right here, if you see, this is a bullish candle, but it's got this big wick at the top, meaning when price went up, the sellers stepped in here and pushed this back down. And indeed, you see a total, a delta of red 16, so 16 more sell contracts. So the buyers tried to come in here, bought 666, and then 4, and then boom, it came down. It closed down near the low, and there's the delta. To me, the delta, um, you know, is more the delta is probably the more important part of this number. Okay. So in this case, the delta was plus 34. I'm sorry. Yeah, I messed that up. So there's 34 more buys than longs. But you can see here, it's a green candle. And so it's pretty much telling me that, anyways. This current candle has a delta of plus 47. Well, you can see this is a very, very big candle. Of course, sellers tried to come in down here, right? And they pushed off of it. And so, I just don't find this to be helpful. But I know some people really love footprint charts. And I think if you use them, it's perfectly fine. Now, the market's closed already. So let's see if we can go to something where the market is still kind of actively running. And so this is something now, this is the way these footprint charts look. You have to kind of zoom in to actually see the data. Okay. Now you can look right here, like this green candle had a delta of 651, right? Well, of course, because it closed up near the high. Again, I just think that footprint charts are just, they make your chart really busy, first of all, and you've got to zoom in to actually see the numbers. And I think when the candle closed, it kind of tells you, what happened, right? Here you've got wicks on both sides, indecision candle, right? You've got 483 buys, 627 longs for a delta of 140 minus 144. Of course, the candle closed red, and that's because there were more sellers than buyers. The buyers did try to come in here. There was a lot of buying up here towards the top of this wick, but the sellers stepped in and closed it lower. And so I just don't find this to me to be helpful. But some people love footprint charts. And if you do, that's great. Okay. So that's one type of candlestick chart. Now, the other kind that I feel does have some value are these volume profile indicators. Now, there basically are two types. There's session volume profile and there's fixed volume profiles. Session volume profile, and inside of TradingView, I have it saved, I think, as a favorite. Yeah, is right here. These are, I would say, are for your scalpers and day traders. You can see it's really hard to see because I'm on a 4-hour chart. You can see all these, but if I drop to like a 15-minute, let's just go something a little further out. All right, here's a 20-minute chart. So basically, each one of these profiles draws for that current session, and it evolves as the session is playing out. So when this session started, this profile started drawing down here, and then over the course of that entire day, this profile develops. Okay, and let me just make a quick adjustment to this because the POC is black, and so it doesn't show up on the chart. All right. And so this is how this plays out during the day. Now, again, the issue I have with this is that it's developing. Now, in hindsight, you can look back and you say, oh, yeah, okay, cool. Yeah, here's this session profile. You got the point of control down here. You can see price kind of trading on either side of it. That's pretty classic until eventually it pulls away and goes up. But in real time, if you put this volume profile, so if you do like replay mode in TradingView and you watch this volume profile develop, it doesn't look like this when it opens. It opens with one bar wherever the session starts. And over the course of the session, it develops, and finally it closes for the day and a new one starts to draw. And it shows you basically what happened during that day. Now, again, I don't find that to be of any value during the session because it's continuously developing, and it's almost just confirming what you can just tell by looking at the price. Now, I think maybe in historical, looking back at, some people like to use like the previous days to say, where was the point of control the previous day? Well, it was over here, now it's down here, so price maybe is going to come lower, but price is already lower again. So I don't find that session volume profile is helpful. And for me, it's mainly because I also don't trade on short time frames. The session volume profile is meant to be used on probably minute charts, whether it's 30-minute, 20-minute, 5-minute. It's definitely meant for day trading and scalping, okay? because I definitely don't scalp, and I may only hold a trade for a day, but I don't consider myself a day trader. I'm more of a swing trader. So because of that, that's the overriding reason why I don't find SVP to be helpful. But even if I was, I don't know. I don't find a session volume profile to be helpful. However, for me as a swing trader, um, this type of volume profile might have some benefit, although I don't use it very much, and I don't remember the last time I made a video where I talked about this. But this is a fixed range volume profile, and again, it's right here, fixed range volume profile. It's a free indicator inside TradingView, and I have it favorited. Basically, what you do with this, let me take it off the chart, and then I'll put it back. You click it, and let me just close this now. It wants you to tell you how you want to draw it. So basically, what I do with this, I'll draw it depending on what time frame. Now, let's go out to a high time frame. Let's go to the 12-hour, and I'm basically drawing it. Whoops, I don't want that. You're basically drawing it for me from the last swing high to the last swing low of the current move. Okay, so for me, that would be like from this high to this low, right? This is the current, and again, the longer the time frame you're looking at, the more valuable this particular range would be. Okay, so I draw it from here, and then you just drag your cursor to the low, and then you let go of it. Okay, and it draws this type of thing. All right, now you can also draw it something like this. Like if you wanted to do it from the last peak swing, which was way up here to here, that's fine too. But a lot has happened in here. So I like to kind of put it more to the most recent swing high in this case, to where price currently is. But you can see this is the point of control. This red line represents what they call the POC, point of control. And that's the same in the session profile. And what all that's doing, it's showing you where the most volume was traded or is currently being traded. And these nodes, these lines right here represent all the volume. So this is buying and selling volume. And this POC is going to draw on the node that's the longest, which is this one right here. You can see this yellow line really extends out. That's your POC. Now, these session volume profiles and fixed range volume profiles, unlike the old classic volume that shows the vertical bars that are time-based, these are price-based. That's why it paints right on the chart. And so that means the highest volume on this asset right now is trading around 135, right? If you look to the right on the price scale, it's 1.3495. Just call it 1.35. All right, so that's where the most volume is being traded. Now, if you have a downtrend, and you can see here, now the POC was here at noon, but that's because when I had it drawn up here. So just ignore this. In fact, let me just take this off so we're not confusing the situation. Okay, so now I have it drawn from the recent swing high to the current price. Now, what are we seeing now? So at some point, this point of control was probably up here. Unfortunately, if you do replay with the fixed volume profile in TradingView, for some reason it doesn't really show you the evolution of the point of control. But there is a setting in here called developing POC. If I turn that on for a second, you can see during this move down, the POC was up here, and then price starts to pull away, and then a couple of days ago, this was on Monday towards the end of the session, the POC dropped to down here. And that's what this developing POC just kind of shows you where you drew this fixed volume profile, where the POC has developed. So back up until Monday afternoon, the POC was up here. So as this price, we're in a downtrend. As price pulls away, the POC is sitting here. Kind of gives you, confidence that as it pulls away from the POC and it doesn't move and it's priced in a downtrend, that's probably a good move. But you can see what's happened now. The POC has now dropped into this range here. It's now at the bottom of this trading range. And you can kind of see what price is doing now. It's kind of undulating above and below this POC. Went down through it. Actually, it's right about here that when the POC dropped. So price started pulling back, POC dropped. Then we had price try to go up. Now it's back down below it. And that's a very common thing. The POC tends to be a magnet for the price, especially when a move is getting old. The POC will move to that area of current price, and you will generally start to see a consolidation. So if I were short this market from like somewhere up here, once I see that POC drop down to this area, I'm probably getting out of the trade, or I'm moving. If I put a trailing stop in at least to protect some of my profit. Okay. Because this is telling you now that volume has shifted to this area here. Okay. And this is what you see. Now, it doesn't mean price is going to reverse, but now we kind of have a range, right? We've kind of established a range. Now, these two lines right here represent what they call, in between here is what they call the value area. Okay, so this is where, and this is a setting you can change, but it defaults to 70%. So that means between these two blue lines represents 70% of all the trading volume during this time. Okay, all right, so above here is, and below here is the other 30%. Okay, now it doesn't mean price is going to reverse and go higher here, but it doesn't mean it won't. But you can clearly see we've kind of got a little range going now, right? Now, this is a pretty big range, but the lower end of the range, of course, is this lower end of the value area. And then we've got this area. You know, if we just ignore this blue candle right here, because it's just kind of like a little pop out, you can see it came right back. We've got this little range going right here. Now, if you wanted to be real conservative, yes, you can move this yellow line up to here and say, here's your range in between here. And you can see it's just going on either side of the value line. I mean, of the POC. Okay. And that's because this is where all the trading volume is going on. So buyers and sellers are battling it out here. Okay. And there's agreed upon parity in the price. And so, yes, there's a lot of volume. There's a lot of buying and selling for whatever reason, whether it's people exiting, entering, trying to pick tops and bottoms, trying to pick breakouts, whatever reason, or if it's just the players in the market, just the big players in the market just agreeing that right now this is a good price. All right, around 135. All right. And everybody is pretty much settled on that. And so, you know, we would like to see this break out of this range from away from this POC. Now, you don't need the volume profile to do that. You can see that price is consolidating in here, but having the POC on here just kind of shows you, again, here's all the volume. Okay. If we were seeing this consolidation and this bearish candle like this, and the POC were still up here, to me, that would tell me that prices are probably most definitely going to keep going lower, right? Because everybody sold from up here. There's still a lot of volume sitting here. This was still the last big area of volume. And as price pulls away, the volume will start to thin out. And as long as the POC stays above the price like this, chances are that downtrend will continue. But as soon as it drops into that area, in this case for a downtrend, now if you flip it over, it would be the LOA in an uptrend. If this price were going up, and we'll see if we can find an example in a minute, but then, you know, we would want to see price get outside of this range. So now if it breaks through this value area and the POC kind of, you know, stays somewhere in here, might not stay right here, but even if it drops a little bit, just kind of like chops around inside of this area, moves up and down a little bit, and we see price break below here, take out these lows, that would, and the POC again stays relatively constant, that would tell me that give me a lot more confidence to continue that short position. If at the same time price kind of moves down and the POC also drops with it and just continues to range, that's probably not ideal. All right. And the same thing, if this pulls away and breaks above here, price breaks above this little range, keeps going. And again, the POC just kind of stays somewhere in here and starts to pull away from the POC to the upside. That would tell me that, okay, that uptrend is probably, there's a lot of buyers sitting here. They've all kind of injected their buy orders into here, the big players, and boom, the price pulls away from this area and starts to go. And then eventually the POC will catch up with it again, as the buying momentum slows down somewhere, the POC will move up and you'll start to see this consolidation again. And again, that's an area you might want to think about exiting your trade. Now, of course, you can do this on any time frame. I could draw a fixed range volume profile on a 1 minute chart as easily as I'm doing it on the 12-hour. Again, though, the higher time frames are going to be more reliable signals for this, but you certainly could do that if you wanted to. I'm just using the 12-hour as an example. You're certainly free to use whatever time frame you want, using whatever system, whatever indicator, whatever price action you want. This concept applies across the board. I just don't trade on short time frames, and so that's that. Okay. So again, if we look at the settings for this, we have up volume, okay, up volume, down volume, okay, value area up, value area down. Okay, so here's the value area high, that's this line. Value area low is this line. Okay, this pricing in here is basically the volume within each one of these nodes. Okay, buying volume, selling volume. Okay. Oops. I forget what color that was. All right. Um, and so on. So those are kind of your settings, and you can turn on the developing POC if you want, which I showed you. You can even turn on developing value area. So if price breaks out of this area, which it's not, it actually will start to draw out. I think it like lightly shades. It's not as like deep as these colors, but let's say the price like starts to break below here. Even though most of the volume is the same, so this value area may stay the same, the chart will the profile will start to draw like a lighter shade coming out of this area if it's going down out of here, or if it comes up out of here. Eventually these value areas will change, but this is basically the area that you're looking at. Okay, so that's basically how you read this and how you can use it. If we look at something else, okay, here's a really interesting one right here. And hold on one sec, guys. I got to check something. Okay. So yeah, I wanted to pull this up. So this is a screenshot that I took about 2.5 hours ago, or no, an hour and a half ago, of the New Zealand dollar currency index. And you can see the volume profile, fixed profile I drew on here. And I notated the chart that the POC was right here. Price was going down, right? The POC was here. Price was going down, pulled away from this area, indicating that the selling volume was really strong coming off this area. Okay. Now, okay, look what the POC has done. The POC, this is the same chart, and you can see my note up here on the live chart from the screenshot I just showed you, right? There's the screenshot. There's the live chart. Okay, look what just happened. The POC, I don't know when this happened. It's happened sometime in the last hour and a half. The POC has now moved down here. So if I was short this market right now from anywhere like up here or even before, from anywhere up here where the POC used to be, and it broke out on this candle right here, then I would be looking to either close my position or to at least tighten up my stop loss. Because now you can see we've established a zone right here. We have this zone right here. Okay, we do have a little wick above there. And of course, the lower end of the zone is the lower end of the value area. And you can see what's happening. Price is now going back and forth above and below this POC line, right? It's below it, it's above it, it's below it, it's above it, below it. Now it's like sitting about at it. Okay. And the POC is now shifted from up here to down here. So this is showing that consolidation. And so there's a real example in real time within the last hour and a half that has shifted. Okay. And so that's pretty interesting. So what does that mean? That means I wouldn't be looking to short this market right now. I wouldn't be looking to take it long either, but I wouldn't be looking to short. Let me get rid of this alert line just to not make the chart too busy. Now, if you want to see a little bit more detail, you can of course zoom out. It's not going to change anything, but it just allows you to see more detail. And you can see how the POC acts as a magnet where price just trades on either side of it. So what are we waiting for? if you're looking to trade this, then you want to see price break out of this, to me, out of this consolidation zone. I mean, the indicator doesn't draw a consolidation zone, but you can clearly see it on either side of the POC. Again, the lower end is at this bottom value line. The upper end I just drew in here where you can just clearly see the resistance level. Okay. And so I want to see price kind of break away. If price is going to go higher, break away and out of here, and the POC just continues to sit here. That means the sellers are stepped in, accumulated in here, and now they're breaking higher, or to come down here, break this low. The value line, the POC sits here, indicating that the sellers have stepped back in, distributing, and they're pushing this thing lower. And then that's when you jump in. Okay. Obviously, you want to use other things to confirm that, whether, whatever breakout or entry characteristics that you would like to use. That's what you want to be able to do. That's fine. I don't know what happened to my picture, but whatever. Hopefully, I'm still recording here. Yeah, I am still recording. I don't know what happened to my picture, but you don't need to see me anyways. Okay. Although it says my camera's still on. So anyways, so that's like kind of a way you can do this. All right. Now, sometimes it's a little bit tricky to find all of the areas, where to draw this. This is really the critical thing, which makes this somewhat subjective, is like, where do you draw it? Okay. Now, when there's obvious swing points, like on the markets I just showed you, great. Well, if you look at this is soybean oil. We just temporarily, let's just take this off the chart for a sec. All right, this is the 12-hour chart. Where do you draw it? Okay, obviously this is the high point we draw it to, but where do you pin the bottom of it? Do you pin it here at this low? Do you pin it here? Do you pin it down here? Now, sometimes it doesn't make any difference. So if we put it back on the chart now, all right, and I'm going to take it from here. And first, let's just go right here. It's putting the POC right in the middle. I think that's too small. I don't think that covers enough price area. Let's drag it a little further. Let's put it over here now. The POC actually stays about in the same area. Okay, and now let's drag it down to this bigger stop right down here. And now, in this case, it doesn't really make any difference, right? Which is actually good. The POC is staying up in here because, no matter where we drew this whole range from, it's still saying at the end of the day that this is where most of the volume is. So again, this is kind of the opposite of what we saw with the New Zealand dollar, where price was going down and the POC moved down. In this case, the POC is up near the top of the range where price is. So I would be leery about entering new long positions right here. And again, let me get rid of this alert. I've got a lot of old alert lines on here. Now, again, if we turn on the developing POC to see where it came from, you can see the POC was down all the way down here until this morning. This was 8 o'clock this morning. The POC jumped up here. Okay. You can see where this line turned and went up. And if you look at the time at the bottom of the chart, that's, between the beginning of this was sometime during the electronic session or the beginning of the North American session this morning. So all from this point here, which was back on February 5th, the POC was chugging along here from February 5th all the way until this morning or last night, depending on exactly when you look at this. The POC was down here, meaning that this is all still a good place to hold the long position. Now the POC has jumped up to this area. Now I'd be a little bit more cautious about taking longs. Chances are what we're going to see now is a little bit of consolidation. Again, doesn't mean reversal. Doesn't mean the price is now going to all of a sudden reverse and start heading lower. Doesn't mean it's the end of the trend. It just means there's probably a little consolidation, a little pause in the market that's coming. Okay. So if we turn the developing POC off, get that off the chart. Now, okay, let's say this starts ranging. Now, it really hasn't yet. This is really like the first candle. Now, probably what we'll see is some of a reversal. It'll come down here. We'll see it like peg below this line, then maybe come back up. And it'll probably just chop around in here for some length of time. It could only be for a couple of candles. It could be for an extended period of time. So let's say that where the price is now, that's the high. So now the top of the value area becomes the high of the range. And then let's just say we don't know yet because it hasn't happened. But let's say, this becomes like the bottom of the range, right? Price comes down, starts chopping around like this. And I don't know yet because I said it hasn't happened. Could be lower. Who knows? Um, that would be the range. And then I'd be looking to say, okay, I want to see price break below this line if that's where it ends up setting up and have the POC sit here. Then I'd be looking to say, okay, now I want to go short or it breaks above here. POC stays put or kind of stays somewhere in here and the price starts going higher. Then that would be a good, signal that the uptrend is continuing. Okay. So there it is the other way. It's kind of the opposite of what we see here uh, on the, what were we looking at? I forget which one we were looking at. Well, it doesn't matter. I'd like to find it though. Well, we'll just leave it there. Okay, but let's just look at a few more while we're at it. Okay, so now here's rice. You've got the top. Here's the swing high, and here's the low. You can see price came down here. Now the POC is still sitting up here. So if you're in a short position, it's still a pretty good place to hold it. The POC is sitting here. Now at some point, this POC may drop down here. If all of a sudden you see these volume nodes start to grow, again, I need to take this off. I've got so many alert lines on here. Most of them have been sitting there for a while. Um, at some time, this POC will drop down, and that would indicate that okay, the trend is at least going to take a pause. Okay, but as long as it's sitting up here, all right, then it's like, hey, there's still a lot of sellers that are comfortable with price going lower that sold off this level, the big movers, the big shakers, price pulled away from this zone, and there you go, right? Uh, Now, okay, so here's one that's like middle range. Now, this is another one that can be a little bit tough to decide, like, where do you draw it? Let me take it off the chart for a second. Let me get rid of this line. All right, we'll just look at now. Obviously, here's the first anchor point. Where do we put the second anchor point? Do we put it here? Do we put it here? Do we put it here? Again, sometimes it doesn't make any difference. So let's grab the tool again and we'll put the one point here and we'll put the second one right here. And we have the POC sitting way up at the top. Okay. Now, if we drag this a little bit more, we put it here. Now it puts it in the middle of this range. Okay. And if we draw it down here, it keeps it in the middle. And if we draw it down here, keeps it pretty much in the middle. So there's a little bit of bias. There's a little bit of, subjectiveness to this. To me, when I do that and I see that when I draw it in these places, here, 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 the POC stays pretty much here. And it's only when I draw it from this level that now it pops it up to the top. That just means kind of like in the short term, this up move is over. But overall, with the POC sitting kind of right in the middle of this whole range, to me, that means that this uptrend probably will continue. All right. And it only would be like when it gets up to here, the volume builds somewhere up here, POC rises up, and then it pops into here. And again, we can turn on the developing POC, which is really good for back testing this. And you can see this is where it was. Then it chopped around over here for a while. Price went up, and then it jumped up to here on last Thursday. It's been sitting here since last Thursday. So for a week, the POC is sitting. So you can sit here and say, well, what if the POC moves right away, while price is moving? Well, it doesn't. When there's a good established trend, the POC is going to sit still. The POC came to this area a week ago. So this entire week since this was drawn, this was all good volume to buy on, right? Pullbacks in here, maybe on a shorter time frame, whatever, this is still a good place to look for long positions. But eventually, what's going to happen is this POC is going to move up, and then we'll start to see price consolidate. But right now, I mean, of course, this is the end of the day. That's why when we move the POC like to here, it raises up here because basically this is the end of the trading session. This is a lot of volume, people that were long closing out their positions for the day. All right. Day traders or swing traders at new highs, they close out their position. That causes a spike in volume up here. And, you're looking at a much smaller area you're analyzing. And so the POC is going to show up here. But it's clear that in the long term, this is still the prime area. And you can see that again, price kind of consolidating around this area. And then boom, it breaks out and it goes higher. Whether you want to use this candle, right? When did I say that it actually? Let me put that back on the chart, developing POC. So from right here. So this is when it got up here. And then we saw kind of that consolidation went up, came back. Again, the POC is a magnet when price is around it, right? Pulled away from again, pulled it away from again. So anywhere in here, right, it's showing that you can see it never got below the POC, even though it kept pulling it back like a magnet. We never got that really trading underneath of it. And so it tells you that, yes, that basically the buyers were just winding up to go long again. So whether you waited for the breakout candle, which unfortunately would kind of be a little bit of late entry, probably be on this candle, but still, this is a 12-hour chart. That's still a pretty good move. Okay. And if you were holding these longs from here, as long as this POC stays put right here, I would just hold the long because chances are this is, whether it's, it won't be today, the market's closed, that to see this turn and continue and break right through this upper boundary line right here. Okay. So there's the DXY. You can't, it's not going to show that. And so this is, so I can just keep beating a dead horse here, and that's it, right? So this is soybeans, and again, depending where you draw this, okay, but this looks pretty good, right? We do have a small swing here, and we've got this swing right here, but this is, you can see where the POC is. I would agree with this. This POC is trading right in here. You can see it got over here yesterday, beginning of the session. It's been, the POC moved up here, and you can see what's happened, right? Prices consolidate. Now it did go up here, okay? It did go up here and then came back. This actually still looks pretty bullish, even though it's consolidating in here. You can see the POC got here, and price has not really been able to get below this POC line. Came down, bounced, didn't even make it. Came down here, a small wick through, and came back, even though it closed lower. So this may eventually turn into a good buying signal that even though the POC moved, it looks like it's still trying to pull away. It's not as ideal of a signal as if the POC were still sitting here, like what we just saw on the other market, but it's just an example. So we'll see what happens with that. Okay. But anyway, so I don't want to just keep, going. We've been going for 37 minutes here. I think it's time to wrap it up. But that is fixed range volume profile, and one way you can use it. It's probably 100 different ways you can use it. But the monitoring where that POC is sitting, and experimenting with different anchor points is important to do. But where the POC is that's the flux, that's the pivot area for price. If the POC is way away from price, then whatever trend is going on is probably going to continue. But as soon as the POC kind of catches up with price, that's just a warning sign that the trend will probably at least take a little breather. It doesn't mean it's going to end or reverse. It just means it's going to take a little breather. Okay. And again, it's hard to backtest this, but one way you can at least see how the POC has evolved during a particular range is just to go into the settings of the indicator and just turn on developing POC. Once you've kind of done that and you've kind of got a good feel for where it came from, I don't necessarily like to see it, so I'll just shut it off. But it is a nice way you can backtest this within the range you're analyzing to see, like, when did that POC move? Did it just move, or has it been sitting here for a while? Where, at some point, the longer it's been sitting there, the more at some point there's going to be a breakout, the sooner there's going to be a breakout away from that area. So, but if it just got there, like we were looking at that other market, where it just literally moved in the last hour and a half, that one's probably going to consolidate for a little while. And that might be one you might want to take a pause in trading it. So, all right. So I hope that was helpful, guys. I know we didn't really look at markets today, but we don't need to do that every day. Um, I just want to talk about it because I did have a question about using um, volume. So to me, as a swing trader and as a trend trader, if I was going to use anything, it would be this fixed range value profile, and it's a confirmation tool. Again, it's not a be all end all, but it does show volume, and I think it does have some value in kind of showing you where you can feel comfortable to hold trades and where you might want to think about tightening them up or exiting if you're in one already. When that, especially when that POC moves and the volume kind of catches up with price, like what you're seeing right here. So to at least tell you that things might be taking a pause, not necessarily reversing, but taking a pause. And the last thing that you want to have happen is you got into this down here, right? And the POC moves up and then price starts chopping and maybe comes down, you give back a lot of your profits because of that. Or even worse, you didn't get all this and now you decide to buy like in here somewhere and the POC is up here and you just get whipsawed in and out of trades, right? You buy, it goes down, you sell, it goes up, right? So it can kind of like steer you away from trading out of these consolidation zones and wait for the breakout. And it helps you visualize where that range actually is on either side of the POC. All right. Anyways, I hope that was helpful and not too confusing. Questions, comments, leave them down below. Smash that like button, subscribe to the channel, and I'll be back tomorrow. We'll talk to you soon. Thanks.